Hi, Robin. Thank you so much for coming to the Investor Talk. How are
Hi,
you?
Max. Thank you so much for having me.
My pleasure. Thanks for your time and be with us and talking to our founders, giving to them a very good tips and knowledge. Before starting, shall we give an introduction yourself?
Of course. I'm Robin Ravi. That's my short name as well. I've also got a long name. So my full name is Ravindranath Gadria. And I'm from London, born and raised in London. I'm starting as an angel. So I'm just getting my experience. I joined the UK Business Angels Association just towards the end of the pandemic. And yeah, just learning.
Thank you so much, Robin. Let's start with the geography. Where do you like to invest? In UK only, outside UK also?
Excellent question, Max. In the long run, I want to be global, but we're small and we're just getting started. So most things are going to have some form of a UK presence for compliance reasons. So that means if it's an international company, European, American, so on, they'll have to be doing some amount of trading or operations in the UK to qualify for, ideally for EIS or SEIS investment under UK terms.
So you invest mostly EIS, SEIS?
Yes. And personally, I'm mostly in London. Of course, there's always room for collaborations if there are other investors who wish to join my syndicates or co-invest with their own VC firms or syndicates, etc. That we're happy to take them so long as they're compliant with their country's laws as well.
Great. And normally, when it comes to ticket, how much do you like to invest?
Excellent. So personally, my ticket size is quite small by UK standards, 10 to 25K, £25,000, that is. And but again, what we're doing is we're sort of disrupting smaller angels like myself with less but quite recent experience. We're collaborating with other serial entrepreneurs who want to contribute but aren't quite ready to make large investment sizes, and we'll form together single special purpose vehicle so we can act as like one pseudo entity, if you like, and we all put in together our money. And the benefits for the founders is they can meet larger ticket sizes, the minimum ticket sizes that way, and it has less cooks, less individuals on the cap table, so it's cleaner.
Yeah, I do agree. I do agree. It's less. The less you have in your cap table, the better in somehow it can be.
Sure.
I suppose you invest very early, so let's say in seed, very early seed stage.
Yes.
What are the top concerns? Where do you find your conviction when investing? What do you take care and look at the most? The company, the team, the product, for example, the service?
Excellent. All of those factors are important, but primarily, especially for concept and pre-seed and seed to an extent, we're mostly looking on the founders, the team. That's the biggest priority, how they work together, their ability to be resilient and weather storms. We've got the economy at the moment, it's quite serious concerns. How they are able to take advice, pivot, change to what their customers want. So team first, and then we're looking at the product and the company.
I mean, you are based in London, investing in London-based startups. How important for you is face-to-face? Do you meet founders?
Excellent. I always prefer face-to-face, but then virtual has its advantages, as we are meeting now, especially for people who are busy. There's obvious time advantages, commuting advantages, save some energy. So I tend to prefer virtual for international founders who understandably can't come over in person as much. But one of the things that I don't like is I get a lot of good messages on LinkedIn, but people cold pitching, and some are great companies, no doubt, but the sheer volume of it would have to be triaged, and you're not allowed to really use automations on LinkedIn. It breaks their term, those types of automations, so I don't. And checking it manually, it's not the best way. So I'd rather they come to a pitch event, come to Equity Matches events and pitch this way. You have a platform like that, and your platform has a huge advantage of having lots of really good filters, so people can meet the right investors, so neither is wasting each other's time.
Thank you. Yes, of course. I mean, we are more than willing to help any founders that want to join our platform. but I thank you so much for advising so and recommending us. When it comes to meeting founders after the investments, how do you act? Do you like meet them any month, for example?
That's a good question. I mean, I'm so early that I haven't got a large enough sample size to make an accurate statement, but I do like to meet them in person. But of course, they're going to be very busy. They can meet me or others from the syndicate, especially if they need targeted advice or if they're doing some large promotional events or something. It's nice for us to be there as at some of their events. But yes, they want to be focusing on building their products as well, not just spending all their time with fundraising, because it can quickly take up a lot of time.
I mean, there are some angels who are very active, and some of them they like to give the money, and they are too much busy, and they don't want to be involved, of course, in running the company, but even mentoring the founders. Where are you? Are you active, or you prefer do not be involved at all?
I'm more on the active side, because the way I see it is, if it was just investing money, I'd be more involved in public markets where I'd have a small size, very small size compared to the size of the PLCs, and then it would just be passively putting in to PLCs or into funds and such. I think the whole point of being more active appeals to me more, being able to help them, not to micromanage them, of course not, but I think as a rough rule of thumb, it's better that they take care of day-to-day operations completely on their own, and they're capable, the founders, and I just help with a bit of strategy or introducing to other sources of funding, or using some of the deals I have to get them discounts on things they're using, like office space, software, whatever they need. In that way, fairly active.
I mean, when it comes to being yourself very early, when the founders you've invested or you're investing they need new rounds, are you going to help them?
That's a very good question. I mean, I don't have as much experience with B and C and beyond, so I'm more focused on just coming to Series A. I can also help them with grants. So grant rounds in the UK, there's some pretty good grants around, so that can help. And founders aren't always aware of those. So we with my business partnerships, we have like market leading deals for them. So they only pay a success fee. I don't profit off that. The company that facilitates their grant applications takes a small cut. So these big sources of extra funding, if you like, I think it can help people to avoid a FFF, friends, family, fools round as well before that. So we can that can help underserved founders who don't have access to just people who are just going to give them that. And moving on to the more later rounds, such as B and such, it would be more introducing them to my contacts who are more experienced in those areas, to be fair.
I mean, can you give your advice to founders when it comes to pivoting? I mean, many times the founder believes that if they had to pivot means they were wrong, right? But sometimes you just need to pivot. Your business model does not work properly. That's nothing bad. I mean, it can happen. But
it happens to all of us in life, I presume. Yeah. Yes. It's always important to, it's the customer focus, or if you're a B2B, the business's focus. I mean, I studied physics a long while ago, and you have a sort of trial and error element. So you've got your hypotheses, you test it, and then you test it on the market. And if your core customers, your best customers want something slightly different, there's no shame in pivoting. There's some really big examples of successes, like I think Instagram, possibly Foursquare, if I recall correctly. Many of them pivoted based on what their user base wanted. And there's nothing wrong with that. It's learning, it's testing and learning from the results. In science, one of my professors always used to say, if you do an experiment and you got the result you didn't expect, that's great. You found the truth. It's finding the truth. The right answer is what our aim,
There's the failure. It's a part of our life. We should learn from failure more than be scared.
Precisely.
Let me ask you, why do you become an investor?
Excellent. I wanted to help impact. I've always been involved in like mostly science and education type social projects. And I worked for some really nice charities. They were great, but the funding models that they were subject to were very old fashioned and weren't always getting to the people. I tried lobbying governments and such. I still do to an extent, but they're due to the nature of it, they're limited in scope in what they can do. Now I see startups, particularly social startups, impact startups, social enterprise, ESG, having this ability to disrupt these spaces and do great things in these areas. So that's how I sort of wandered into it. I found, now there are funding is evolving, it's disrupting in several countries, particularly in the UK, and there's potential for improving these, getting funding to these companies who are trying to do something good, build something better for the future.
I mean, where do you like, in terms of sectors, where are you focused the most?
Excellent. So personally, I'm focused, my very core focus is between the overlap between fintech and edtech. We're looking at a huge cost of living crisis at the moment. So we have ideas from that both. I have a couple of ideas at my startup studio, which is still in fledgling mode, and also open to other people with companies in that space. But the syndicate should be broader because that will be quite narrow to just find people like me with ed tech, science tech, and tiny bit of finance, that sort of narrow overlap. There'll be others in other areas of ESG, and we'll welcome their experience, expertise, and investments, of course. So they could be parts of our syndicates too.
I mean, let me ask you, if you had 3 startups, pretty much similar,
Right.
and coming to pitch to you, you are undecided. I mean, but in the end of the day, you need to decide where to put your money. Which are the critical points that say to you, okay, let me invest in A and not in B and C?
Wow, that's a great question. So as I said, again, I'll go back to my previous answer, mostly the founding team and how well they can work together and not fall out, because it's always going to be challenges. So they've got to not take it personally and, do their best for each other and for the company. So that'll be the main consideration. Then we could look at numbers and get a rough idea of success, although those are only predictions. Things can change, and we can look at the potential for the market, predicted annual growth rates, predict the revenue, and see which are slightly better. As the syndicates grow, there may be a potential where we could say, well, 2 out of 3 of those startups we're really like, and a neck and neck, so we can hedge, if you like, put a little in each. But at the moment, in early days, we've got to be a bit more judicious, and we could potentially eventually put them forward. So like have pitching events and see if other investors are free to choose which ones they want to invest in. So they may disagree with me, and that's fine.
Okay, we can't agree all the time. Disagreement is part of the game.
Of course.
What can be the perfect? We know there is not a perfect pitch, but how should be a pitch that can convince you?
Interesting. So if it's referring to the pitch and the deck, I'm seeing like pitch decks are slowly, the way I see it, I'm going to make a bold prediction, but I see newer methods of pitching are more appealing to me. So not just a standard sender deck, lots of messages, back and forth messages. Everyone's very busy. So when I see some pitch that's creative or something completely different about it, that stands out. Also, it's more about if they've shown a thorough on the technical side, if they've shown a thorough understanding of their industry, they've got some experience, they demonstrate that in the pitch, their founding team, their advisors, if want too many cooks, too many advisors, but if there's so if they're a first-time founder and they don't have experience in XYZ on the founding team, but then their advisors' experience complements that, that's great. So yeah, again, it's looking at the team, their background. It's very much team-oriented at these early stages, I believe.
I mean, how funders should approach yourself, for example, or investors, in your opinion?
Excellent. I mean, again, it varies each to each. I noticed on Equity Match you actually have which is really nice. You have a filter which says preferred mode of communication. So for me, I'd prefer at events, either in person or a virtual pitch night, and sorting out quickly rather than having as I said, the inbox on LinkedIn, the emails, well, we get more emails, I suppose. You must get even more than I do. And but with emails, I've got quite a good software stack for filtering the important ones. And I can use autoresponders for the basic information and give a more personal touch if someone is asking something that can't be answered by a chat or autoresponder. LinkedIn can't really do that, not without breaking their terms. So I don't. So that's the thing. And it's a shame because we're getting a lot of good pitches on LinkedIn. I'm thinking of just setting my auto response to have a link to go somewhere else to a pitching room how I want to be pitched. So they can do that. Then, of course, as we hire more people, we can have we're hiring some apprenticeship students to help filter them and find the reasonable pitches and narrow them down to pitching events.
Can we talk about IP? It's important for you that the startup you're investing in has proprietary on the IP?
Yes, so it really depends on as far as I'm aware, the type of company. Obviously, IP is great, but patents, for example, there's a cost. It takes a while, and it's not applicable to every type of company as much, but it is very important. And other forms of IP, trademarks, copyright, and such. But if it's something that wants to achieve market dominance, if it's a hardware or deep tech startup, then the patents are very important. There's good scope, particularly in the UK. Like the British Library provides free training for founders on them, and the quality is really good. And just to get them to grips with it, we're having talks with IP lawyers at the moment. I actually met some of them yesterday, and to further on our processes as we move into that. But looking at certain things with software and such, certain things, I mean, yes, there's patents there too, but it's more about their execution and speed to getting to market quickly and efficiently enough. Because there are some things that a larger company could develop themselves without violating one's IP. And then even if you do have it, you've got to be prepared to defend it in court, which is time and cost consuming. And the way innovation works these days, like I might be back when I was briefly a scientist, I might be in a lab inventing something, thinking I've got a new invention, and someone in Japan or Australia or anywhere could be doing exactly the same. Neither of us stole the idea of each other, so it's getting it to market faster is important. And it's nice to have for certain companies. It's paramount, but for others less so. And one can spend too much money on acquiring the patents and enforcing them. So, yeah.
I agree with you. Sometimes the best protection is moving faster.
Yes. And moreover, so like, let's say a large company like Google could probably come up with everything that many other startups could. They won't necessarily, due to there's always going to be disruptions in the market from smaller companies, and they've got more of an acquisition strategy, or they might have come up with something similar, but the market is too small for them or not as valuable, so they might not be doing it. So certain things Google needs to have online because their monetization is based on showing adverts and new adverts, advertising companies, businesses, so on. So that means certain startups could build better offline products, and they are.
I agree, absolutely. No, that's the advantage of being a startup.
Yes, that niche.
I mean, let's say I'm a founder, and I want to start up, I want to create my venture. What, in your opinion, are the most promising sectors to start a venture?
I would say, well, it depends on the founder's experience as well. But a wise angel I met, Marty Zilic, I can't pronounce his last name so well, but Marty was saying a while ago, I have his book, and he said, if a city is dominating in something, you should focus on that. So London, for example, is very fintech heavy. So if there's a fintech element to what you do, it doesn't mean completely change what you're doing, maybe, but you can somewhat pivot, I guess, but like between those sectors. So when I was talking about between fintech and edtech, or between these sorts of areas, these sorts of niches between different sectors, I think are growing. We've got super apps. Some people are making, certain fintechs are making super finance apps, which just do a whole multitude of things well, and those are really high growth. London is probably the leading city in the world for fintech, at least for building the products. Maybe they exit in other regions, but yeah, so mostly fintech, I would say. Yeah.
May I ask you your point of view, and we finish with this one on metaverse. There's so much talk.
Big question there. Yeah, I've got mixed feelings on it. I see it became more to for, of course, I don't think there were, correct me if I'm wrong, but I don't think there were any huge technological advances recently. It was more social that people like Facebook were pushing into this. So they're putting a lot of money and investment into it. I'm still a bit cynical. The jury's out. It's not quite as advanced yet, such that you'd want to replace real life for it. It serves a purpose, but there's a lot of speculation going on and a lot of what I would say gambling, which isn't what we want to be involved in, I don't think. Eventually, as AR and VR improves, and it's going to be far bigger. But it's very early to call some of those decisions, and one doesn't want to bet. I've also find I'm worried about, I'm concerned about, like, parents are often telling me that with their young children, they don't want them to be online too much and stuck in. They need to go in the real world, and they do need to socialize. People going into early careers as well, particularly during this pandemic and such, some of them haven't had chances to do internships or work outside in the real world. They've just been working from home, studying university, and they need to get out into the real world.
I agree. We are risking to be too, let's say, detached to what is the real world. So it's can be a big concern, especially when it comes to the young generation. Very big, but it's there. It's evolving. Let's hope we can have a good use of it and not a bad one.
Yes.
No, as I always found very attracting when talking to a friend of mine. He told me it depends how you use something, right? It can be bad and good, still the same, but it depends how you use it. That's it. The different is
double-edged sword.
Exactly. So I hope we do use metaverse in a good way, not a bad way, as we are doing with socials media. Anyway.
Yes, if we're more AR based and going along that route, I think that's quite interesting. Still be out in the real world, use a bit of AR, and I think that's a really nice way to do it.
Yeah, I mean, I'm not that much concerned, although I don't think the technology is still there. We are not that advanced. I'm not sure the market is there.
No, maybe not yet. Maybe one day. But then I was on a side note, if I can, I heard Stephen Hawking and a lot of physicists talk in the past. The late Professor Hawking was saying how this universe is probably a simulation. So when we once the metaverse is that indistinguishable, it's nowhere near there yet. We might not see it in our lifetimes, but once it's at that level where we can't really tell, now it sounds like a sci-fi plot, but then we've got something.
I do agree. Robin, thank you so much for coming to
No, thank you, Max. Pleasure is mine. Thanks for having me.
Thank you for your time. Take care.
Take care. Bye.